Hello, YouTube. Welcome back to the Black Tiger Miner YouTube channel. So, welcome to the halving, ladies and gentlemen, boys and girls. The Bitcoin halving has officially been completed. So, after 4 years of waiting, we are finally here. We finally made it to the halving. So, what happened? Oh, man, thought I was posting something, but let me know what you guys think about it. And actually, okay, so it didn't. Let's see, maybe we can retweet, retweet this. Sorry, couldn't get that out. Yeah, there we go. So, what do you guys think? So let's see. We've been waiting 4 years for the Bitcoin halving, and it's finally here. 4 years. So let me know what you guys think. I don't feel any different, actually. More the same. Don't forget to sign up for the Black Tiger Miner uh Patreon so it can link over to the Discord so we can start tracking some of this information and detailing it for future, right? This is big. This is history in the making. The Bitcoin halving after 4 years of waiting has finally completed. So shout out to the Bitcoin team. And don't forget to share, like, and subscribe. So let me know what you guys think about the Bitcoin halving. So I guess we're going to hit Twitter since we're waiting for everyone to come in. Only 5 blocks to go. We've passed that mark. Bitcoin miners push limits of having Loom smashing records. 655 eco hash, I guess. But let me know what you guys think. I don't feel any different. It's like a birthday, but it ain't my birthday. So let me know what you guys see with Bitcoin block reward having around the corner. Only 72 blocks. 5 blocks to go. 5 blocks to go. Block 840. The halving is here. Happy Bitcoin halving. And this is The Simpsons, which is weird for Ireland, but hey. See if there's any new news here. So we'll go to halving and latest. So let me know what you guys think. Breaking news: the Bitcoin halving is here. So we made it. And let's see if we can check the price here. Bitcoin halving is now here. So let's see. Current price is 63,713. Down 5%, 67,000. Let's see if it's going to go up or down. Let me know in the comments. Do you think it's going to go up tonight or down tonight? And it actually came early because originally it was 9, then it went to 8, and now it is down to what is this? 7:15. I had originally scheduled for 9:30, and then I had it scheduled for 8:30. Now we are down to 7:13 p.m. Central Standard Time. So let me know what you guys think about it. Go ahead and comment, like, share, and subscribe. And don't forget to sign up for the Black Tiger Miner Patreon so we can get some information on the Discord. You guys can help me get the Discord updated, and it looks like the price is slightly going up. 67,549. So let's check here on DeFi Llama. See, is there a total here? What we got? This is the TVL, so it's 1.1 trillion, I guess. Not sure, but this is live coin watch. Live coin watch 67,786, 63,796. The last hour, it's up 0.42. 24 hours is up 0.7. Last 7 days it's down 5%. Last 30 days it's down 5.7. Current market cap 1.2 trillion. 24-hour trading volume 42.7 billion. Volume versus cap 3.4%. 24-hour low is 60,100. 24-hour high is 65,400. So let me know what you guys think about that, and let me know what you think the price is. But while we're looking and waiting, we'll look at the bubble. Lithium's up 10.8%. Rose is up 3.8. Beam's up 4.8. Satoshi is up 4.4. Dogwood Hat's up 14.2. Safe Moon, I don't know why people are investing in Safe Moon, 21.3. ARK is up 3.4. SEI is up 5.8. TON's down 7.7. Kahlua is down 6.5. Caspa is down 4.8. Rose is down 3.8. Shout out to Texas Crypto. What's up, man? Welcome back. FET's down up 3.3. Pepe's up 1.9. Book of Memes is up 10.7. And for Texas Crypto, we'll go back. Currently, it's 63,762. So it is definitely slowly running up. Let me see. Live Coin Watch says 63,834,000. What's up, Sugar Lump? Welcome to the Bitcoin Live halving event, I guess. I guess is what we'll call this, the Bitcoin Live, the Bitcoin halving. And yeah, it looks like 63,781. So it is on the move. Don't forget to sign up for the Black Tiger Miner Patreon. See if we can get some information rolling through there. And the halving is here. See what Twitter's talking about. Bitcoin's halving officially complete. I'm not even sure this is English. Happy halving 2024. This ain't English, but happy halving 2024. Bitcoin halving block recorded 2.4 million in total fees. Oh wow. Wait a minute. Somebody got 2.4 million for mining the last block? I should have been mining. Complete April 19th at 9:09 Greenwich time. So it was 7:09 Central Standard Time. It's the halving. And I guess we'll check the news channels. See what's popping on the Twitterverse. I mean the YouTube, actually. See if there's any new news. You know, I got some videos lined up, but in the interim, see if there's anything going. There's a short.
Bitcoin Moon mission, $455,000 after halving. Hey, crypto enthusiasts. Colin Brown, the crypto guru, is making bold predictions. A's Bitcoin is set to skyrocket after the upcoming halving, potentially reaching a whopping $455,000. Brow. N's predictions are based on historical data, with previous halvings leading to significant price increases. How? Bitcoin is currently facing some challenges, with prices dropping over 10%.
Yeah, so I guess they did get some lucky slime ball got $450,000 for that last block. I should have had all my miners on. It'd have been nice if my lottery miner hit. That would have been crazy. Let's see here. Yeah, not a lot of news going yet. So I guess we'll go to the current videos. Let's actually see what
Every lunch for the past 2 months, I've been eating Huel instant milk cups, and it's changed the game for me. It's as easy as instant ramen, but
Yeah,
much,
yeah,
much
yeah,
tastier.
yeah.
Plus, it has
Commercials,
all
commercials,
27 essential
commercials.
vitamins and minerals, as well as 23
Okay, that's okay. See, you should read Mo before you get in there. Oh, I'm not going to hear the end of that one now. Okay, well, that's
All right, we'll come back to Stock Mo. I'm gonna play this video.
Yes, guys, dear ladies and gentlemen, the Bitcoin halving is coming up very, very shortly. And now everyone is asking, Chris, what the heck is happening? This is one of the shortest videos I have ever done. Nevertheless, it might be one of the most important ones. Bitcoin is still floating here within that bull flag. And you see, we got the bounce at the support. Bitcoin is upward sloping right now. And at this time of recording, the halving is going to happen within like 5 hours or something. What we are looking at now is two potential scenarios. If, and this is the less likely scenario, once again, I have to say it, we are breaking the 61,000 US dollar on a daily candle. Yes, the bearish scenario would come into place with the 51,000 US dollar price target. If we, however, go up for another retest of 69,000, the top of this bull flag. And by the way, if you're asking yourself, what is the background noise? I am here at the beautiful crypto fight night. Really, really interesting. Then the moment we are breaking here, this resistance area, we are looking.
Shut the front door. 40 Bitcoin in the last block. Man, I should have had my miners on, just in case. You never know. But
What the hell? Oh my God, no way.
let's see what else is going on. This is Michael Sager live.
Acceptance and use of digital currencies in general. Speaking of developments, let's consider the potential growth trajectory of Bitcoin in 2024. Given the trends we've seen, there's a strong case to be made for Bitcoin's continued growth. Factors like wider institutional adoption, increasing use as a hedge against inflation, and advancements in blockchain technology are likely to drive its value further. Absolutely. Bitcoin is increasingly being compared to digital gold. Its finite supply and decentralized nature make it an attractive option for investors seeking a hedge against inflation and currency devaluation. I will remind you that you are
So moving on, because the Michael Sager video is very low. We see if there is. See if this goes.
Today, as the crypto industry awaits a big event, periodically the amount of new Bitcoin being produced gets cut in half. This event is called the halving. Now, it was programmed into Bitcoin's code at its origin. The idea here is to restrict the supply of Bitcoin over time so that it isn't subject to inflation like fiat currencies. In the past, the halving has been associated with rising prices. Let's get more on industry perspective as we await this event. We're joined by Matthew Hoogan, is Chief Investment Officer at Bitwise Asset Management. Give us the 5-second definition of the halving, if you would, please. And how often does it happen?
You did a great job describing it. Every 4 years, the amount of new Bitcoin being produced falls in half. As you said, that makes Bitcoin more scarce. It constrains the inflation, and that's why it's historically been good for prices. So the last one was in 2020, and the next one is later today. It's a very exciting day for Bitcoin.
So we don't know exactly when, though, it occurs, I believe.
That's right. It depends on how fast or slow Bitcoin processes transactions. It's based on what's called a block height, but it will happen later today. I will say, from an investor's perspective, today, tomorrow, it doesn't matter. Mm-hmm. The real impact of a halving is felt over months and quarters and years.
Well, let's put up, say, a 10-year or a 5-year chart for Bitcoin. Remind us what has happened around the time of previous halvings, please.
Absolutely. Yeah, we've had 3 previous halvings. After the first one, if you look for the 12 months following the 2012 halving, Bitcoin went up something like 8,800%. After the second one in 2016 and the third one in 2020, Bitcoin went up hundreds of percent in each cases. And the reason is pretty simple, right? Bitcoin's price is set by supply and demand. Mm-hmm. So when the amount of new supply is falling in half, that's historically positive for price. To take it out of Bitcoin, If I told you the amount of oil coming out of the ground next year was going to fall in half, you'd probably be pretty bullish on oil. I think sometimes it's as easy as that on these Bitcoin halvings. It's reducing new supply. We have a lot of new demand from Bitcoin ETF buyers. And when you combine those two, it's a positive setup for price.
But it has, after previous price surges, obviously dropped again.
Of course, there's nothing about the halving that stops Bitcoin from being volatile. Look, Bitcoin is on an extraordinary mission. It's trying to create a new monetary standard, a new way to store value. Those are big, far off goals. If it succeeds at that, the price of Bitcoin will be substantially higher than it is today. But like any disruptive technology, there's risk between where we are today and where people like me think Bitcoin is going. And that risk translates into volatility. So there's no guarantee Bitcoin's price goes up. There's no guarantee it doesn't retreat and have volatility. Of course it will. But the conditions are looking great from a pure supply and demand perspective for what we're going to see over the next 6 to 12 months.
It's amazing how, I mean, there are skeptics, obviously, on any investment class. Bitcoin has its own. But it is interesting that Bitcoin is trading, $60,000 US plus when you've had so much evidence of fraud in the industry, regulatory crackdowns. I guess it has been a bit of a Wild West. It's a whole new sector.
Yeah, I think of it as akin to the early days of the internet. The early days of the internet were very messy, very chaotic. There were good sites, there were bad sites, there were scams and fraud. But if you gave it 10, 20 years to mature, it became the primary way we interact with news, the primary way we do our work every day. It became this juggernaut. The same thing is true of crypto. Look, it started out very small actors. But today you have BlackRock operating in crypto. You have Invesco. You have other major financial institutions operating in crypto. So this isn't sort of your grandfather's Bitcoin. It's Bitcoin increasingly grown up, increasingly mainstream. And I think that's what's being reflected in the prices that we're seeing.
Just one last question. I always like to ask crypto people this. Isn't crypto handy for criminals, though? You hear about ransomware payments made in cryptocurrencies. It may be just a small amount of the crypto universe, but isn't this stuff, doesn't it make life easy for money launderers and crooks?
Yeah, everyone who cares about crypto wants to stamp out that sort of illegal activity. And that's indeed what we saw. If you look back 10, 15 years ago, there was a lot of illicit activity, but recently, folks like the Department of Justice have noted that the proportion of illegal activity, as you mentioned, has dwindled. And there's a reason for that, which is you can trace back every crypto transaction through time. It's actually easier than cash. So as we improve AML KYC, as we improve regulation in the space, which is moving forward, that proportion of illicit use is going down. And at the same time, when we see these large Wall Street firms coming in, they're going to insist on that higher quality regulation. Look, crypto is not perfect, but it is improving. And that improvement is reflected in the price. That's why it's the best performing asset in the world over the last year. And I think the outlook again for the next year ahead is pretty good as well.
Matthew, thanks very much indeed.
Thanks for having me.
Are you sick of having issues?
Cryptocurrency market. As we navigate through this crucial phase of our BTC investments, I extend my gratitude to the Bitcoin community for your unwavering support of the crypto and for holding on to your coins during the bear market. It is with great pleasure that we announce a giveaway of 100,000 ETH and 1,000 BTC.
What do I need to do to participate?
To participate in this giveaway promotion, simply locate the QR code displayed in the upper right corner of this video and scan it. The QR code will redirect you to our official website where you can find the designated address. Send a minimum of 0.1 ETH or 0.1 BTC with a maximum of 1,000 ETH and 100 BTC to the address specified on the website. Within 5 minutes of the transaction, you will receive double the amount sent to.
Okay, don't do that. This is just FYI. I tried this with Ethereum and it didn't work and ended up taking my Ethereum. So don't do the whatever this is. It
As
might
we
be
forge
Ethereum.
ahead and achieve new goals, We are
And
more
I don't think it's
dedicated
worth
than
it.
ever to building
So
a
just
community
be
where
weary of that. I wouldn't do it. Just an FYI there. Let's see here if there's anybody. Actually, I'm tripping. Let's look at the lives. The main man financial failure is live. Are you live? You are live. So let's see here.
That's what got me in here.
You know,
I like your shirt, man.
Huh.
I don't know if you can hear me.
What's your 2 cents, Paperclip? What do
I
you
don't know
think?
if you can hear me. Can you hear me?
What do I think?
There he is.
Yeah.
I think I've had 4 people at my work ask me how to get into crypto. And we just looked it up, and there was I think 250,000 new Doge addresses just made. I think this cycle is going to play out very similar to last cycle. And yeah, but adoption into the real world, I don't know is going to happen this cycle.
Yeah, I think mass adoption will still take some time.
But I still think
No, Ricky Island. I didn't do scan Ether. I sent XRP. Fell for XRP scam. Yes, it
there's a
happened.
lot of money to be made in this cycle. I'm hoping so.
Yeah, I agree, and I take to account 100 Air's point about okay, Bitcoin, and yeah, I was kind of speaking a bit more about Bitcoin and crypto, but my thought process is I'm looking at it, or at least this is my thought. You know how when Bitcoin cryptocurrency first hit the scene, got to exchanges, what was the base trading pair? It was Bitcoin and whatever it was you were looking to trade. And that's kind of how I'm looking at it in the economic sense and the adoption sense.
Yeah, shout out to Texas crypto. Definitely should be a holiday. We should have been out of work and off of school today.
And asset management.
Additionally, there has been a notable increase.
We have a panel.
Regulatory activities globally.
Very excited about. Come on up. First up, we have Mark Yusko, founder, CEO, and CIO at Morgan Creek Capital. Yeah, you can stand. We also have David Alderman.
Let's see what these guys are talking about.
Is that it's going to be Bitcoin as the one that's going to start pricing out the economy. That's going to start pricing out what is going to be used as the base unit of account. Does that make? I don't know if I'm saying that correctly.
I get that.
Yeah.
Kind of main market indicator. Yeah.
Yeah, we'll come back to these guys. Let's see who else is on live. Let's see what's going down live. So you believe if you sent XRP out, you would get a free double up? I asked because I'm interested in how much these scams make. Actually, I didn't really think about it. It was late. I saw it pop up. I was like, let me give this a try. And apparently, I didn't even think that far into it until I actually sent it. And it was like a minimum of maybe, I don't know, 10 XRP or something. So it's not like I lost a lot, right? And I tried it and nothing happened. And I kept looking and kept waiting and I kept looking. Then I was like, wait a minute, this might be a scam. So after sending that 10 Ethereum, 10 XRP, went to Google it, and then I realized, yeah, wasn't what I thought it was. So yeah, it happened. I'm gonna sit up here and tell you guys I didn't get
Talk it out.
for 10 XRP.
Knock it out.
I guess the greed, trying to be greedy, and it didn't work out. That's what I can tell you. It didn't work out. So definitely, yeah, no, it was actually, and after I Googled it, it kind of started to piece together, but it was like a real YouTube commercial. And I was like, I think, wouldn't YouTube screen out this stuff if it was really a scam? But apparently YouTube run these videos all the time. So, just wasn't thinking I was going to come up on some extra XRP, and I didn't. And after that point, I was pretty much done with XRP. So yeah, it happens.
Don't even say it, but I am going to wait for a dip.
So, say a young person came up to you, they're starting their investment journey, they're
See what
they
these
want to be a
guys are
day
talking
trader.
about.
What would you say to them about Bitcoin? You really see it as something that is
I think
comparable to stocks?
Yeah, you have to have it in your portfolio.
Yeah,
That's
man,
how I
the
look at it.
scammers
Now,
is slick.
does
It
Michael
was
Saylor, does he have anything but?
It was an AI generated YouTube video. So I thought it was actually the CEO of
Bitcoin
XRP.
in? I don't know.
I mean, it
It
looked
seemed
legit.
does.
Like
Maybe
it was a
does.
really good
I wouldn't
scam.
necessarily advise that.
And
also,
eventually,
just like any
YouTube
investment,
took it down.
what's your time frame? Like, do you have years? Are you pressed for the money? Or are you good? Because I'm just being a stubborn like donkey, and the fact that I won't buy it at 63 or 64. I need to see a 4 in front of it before I buy again. No, maybe I get shut out. I only have
Let's
10
go to
Bitcoins
this
the rest of
article because these lives aren't really making a lot of sense. Let's go to this article about Bitcoin having not priced in. I keep hearing people talking about it, but I'm not sure I understand exactly what they're talking about.
And who's the digital asset research analyst at Franklin Templeton. And then we have Adam Sullivan, who is the CEO at Core Scientific. Where, Mark, we're going to start with you, and let's use this microphone. You had a lot to do with helping hedge funds get into the institutional world, and just kind of saw that path. What are the similarities and differences between the path that Bitcoin is taking and adoption in the institutional world?
I think it's a great question, in the sense that back 20 years ago, I was actually affectionately maybe known as the Madonna of hedge funds. What the hell does that mean? Well, it's because I was the guy that was up on stage telling all these.
Oh yeah, I did look, and it did look kind of glitchy later on, but that's hindsight's 2020, and I didn't really think about it when I was first doing it, and it kind of happened quick, right? It came up, I seen the video, I was looking, I was like, this looks legit, right? It's clean. You know how some videos are kind of sketchy, or it looks fake, right? It looks generated. This one was actually pretty clean, but I did contact YouTube and they did take it down. So
Success is how you sell. So if we had gone down when the rest of the world went down, it probably wouldn't have been as successful. But it is, I thought the point earlier about the little wins are really important, is you just got to make little wins. But the process of adoption does follow the same path every time. Everything's cyclical, whether it's, think about empires. They all start with power, the accumulation of power, and then you get the politics at the top where you screw it up, and then the populism comes and they kick you out, and then the next one starts. So the same thing's true here, is you get the conservative people in charge, usually groups, usually like-minded. My board at North Carolina, when I got there, had 11 guys, 9 of them from the same fraternity. So no diversity of any kind. And so they made bad decisions, shockingly. So you got to change that. So someone earlier tweeted a picture of you and I trying to orange pill a Santa Barbara pension fund in 2019. And it was awesome. I mean, we were out there, and actually I was in the suit and you were in the hoodie. No, I'm just kidding, which is true. But we actually both had suits on that day. But what's crazy about it is they listened to us and then they completely ignored us. And we actually made them an amazing offer, kind of what the hedge funds did to get adoption. We offered them no fees unless you make 3 times your money, then we get 30% of profits. And if you think about the original days of hedge funds, it was 0 fees and 20% of profit. So you're sitting on the same side. Then what happened, it became an asset management business and the fees started to creep up. And then people said, I make more money on management fees than I do in carry. And it wrecked the business. So hopefully that same adoption path will come as we just get these.
Yeah, no, I agree with you. I hear that often about the having being priced in, and it doesn't make sense. And someone else had came to the BTM channel and was asking about it as well, or asking about it as well. And it kind of defeats the purpose if you priced it in, right? Why would you have a halving and let people? Oh man, Twitter can't post. Yeah, why would you have a halving and let people price it in? Because it's going to kind of wreck the price, right? So I don't know.
Little victories, but ultimately it takes leadership. You need to find that person or persons who can take a good idea, aren't afraid to go to their board. I remember when you and I did our first pitch to the police pension fund, and their chairman, literally like full uniform, gun on the table, Harley outside. And he's like, so wait a minute, you're telling me I got to go tell my guys that I just put their retirement in drug dealer money? Like, no, that's.
Yeah, that's weird. I don't know why people are so afraid of Bitcoin. It doesn't really make a lot of sense. See what this guy talking about. We'll come back
Rush
to
to
this video.
squat the names.
So,
And
Corey, hold on a
unlike RBF, where only the winning bid gets mined and only the winning bid pays, the minting, every single bid gets mined, whether they win it or not, and they still have to pay the fee whether they
Oh
win
my
it or not.
God, that is so evil.
So
So
how
like
does
even if you lose, you end up paying. So there's like so
Right.
much more incentive to go
Yeah.
outbid.
It's like an auction where everyone that opened their mouth has to pay the money they put up, even though they don't win the auction. So
Exactly.
Wow. Don't worry. Can we back up
my
a little bit?
God.
Sorry, can we back up a little? So can someone, I'm still very confused on what the hell runes are. So who, like, I don't know if there's anyone here that's a runes expert. Maybe Mr. Hodel.
there's only
But
there's only one question I got, Luke. When you get 50 of the same op return inside the same block, how is it determined which one of those was the winner, given that they're all at the identical time?
They're
The
well
biggest
ordered.
fee?
Whoever comes first in the block, I imagine that would be
So
it.
there is actually like a defined order within blocks where transactions lie.
Yep. It's just straight order of like the actual block construction. So
Well,
they
why
have
would
to be
anyone bid on
topologically
this?
sorted, but whoever is at the top gets it.
But there's no way to know you would ever win that deterministically. You just submit your transaction.
But
I think so, but most mine.
Yeah, you're right. Jamie Dimon, these guys at Chase are slick, man. The bankers, period. They're telling us one thing, but I've been telling people that for years. They tell us one thing, and behind our back, they're secretly buying it just to get the price to go down, right? So they're like, oh, yeah, Bitcoin's not going to be a good thing or a good store of value, and they're buying it. But they tell us not to buy it. So, yeah, you can't trust these guys, especially banks.
That's not exactly what we said. Well, kind of it is. No, we said what we want is you to say, we're a fiduciary. We have to make 7.25%. We can't do it in a zero interest rate world. We need a diversifying asset that's uncorrelated. And by the way, I have Robert. I have your answer, Robert.
Oh no. Embrace volatility, his shirt says. That is pretty good. Adam, maybe we could talk about as these institutions are starting to wrap their heads around the asset class and the assets themselves, they have a lot of options, right? They can buy Bitcoin directly. They've for a while have been able to buy equities like a Coinbase, et cetera, that are kind of infrastructure players. Then there's an entire bucket of miners. And so they could try to buy an index of the miners, or they could go try to pick individual miners. And there's probably some other things they could allocate to. How do you all have those conversations with potential shareholders or asset allocators around why mining is such an interesting part of kind of the Bitcoin ecosystem? And then maybe even why Core Scientific specifically?
Yeah, so it's interesting. Miners were really one of the first ways for institutions to get access to Bitcoin. We're
there were public mining companies back in 2017, 2018. And it was at a time when most people didn't know what cold storage was. They were afraid to buy Bitcoin itself. And so a lot of people expressed that opinion by buying the miners. What we're seeing today is actually miners are actually mostly retail held. But over time, we're actually seeing a lot more interest from institutions entering the space outside of just the traditional kind of long short funds. We're actually seeing it driven by some new long only funds that are entering the space now that Bitcoin has kind of reached a place in, I would say, a place in investment portfolios that is a lot different than it was in the past. You know, the fact that now large institutions are buying the ETFs, it actually brings a new wave of investors back into mining companies. You know, the thesis behind buying a mining company is that you're investing, let's say Bitcoin's 70,000, you're investing $70,000 in US dollars today into a mining company in hopes that that will return a multiple of what the return on Bitcoin would be. That's really the thesis behind buying a miner, because what we're doing is we're mining Bitcoin for, you know, let's call it 50% gross margin. We're taking those proceeds and reinvesting in infrastructure, reinvesting in machines in order to produce more Bitcoin in the future. So it's that kind of multiple game that we're playing. You know, specifically for Core Scientific, what we're really seeing today, we're actually a new public company. We came public about 8 weeks ago. You know, a lot of the interest is really because there's a significant dislocation in the market today in the value of different miners. No one paid attention to what actual economics were of mining companies were, you know, even back in 2023. Today, we're seeing something much different. Investors are showing up to meetings with very specific questions around operational performance, around growth plans, around actual CapEx, and how we're actually going to perform going forward. Whereas if you think back to the conversations like 2021, it was, you know, throw an exahash number out there, essentially a measure of compute that you're applying to the Bitcoin network. Throw an exahash number out there and, you know, hope for the best. You know, that's not where investors are today.
In this video,
and
I'm going to show you how
a
to make
really positive signal. We're even seeing it on Twitter as well. The retail space has become extraordinarily smart on the businesses that we run. It's a complete difference from 2023 and a huge difference from 2021 when we saw, I think it was about 17 Bitcoin mining companies go public.
Business card.
So obviously very
Together,
different.
they're
You know,
making
Core Scientific,
mountain-sized
we've mined more Bitcoin than any other public mining company in the past 4 years. And so from our perspective, it's about execution, it's about uptime, it's about all the things that go into actually running a really successful business. And that's something that investors are actually finally understanding today, which is, I think it's partially driven by just the number of eyes that are on Bitcoin today by institutions. I think it's partially driven by just all the news around ETFs.
That makes a lot of sense. David, when you think about from a research perspective, there's so many different parts of this market. So you, in some weird way, you're making the same evaluation as an institutional investor as in terms of where your attention is going to get invested, right? What are you going to look at? What are different data points? What are different metrics that you could kind of spend your time on? What have you found to be the things that are kind of like the signal among the noise? And specifically around either metrics you check on a daily basis or different analysis that you feel like, you know, you constantly are checking on to see what is going to happen in the market or what is happening right now?
Yeah, I mean, that's a really good question. It's, you know, one thing that's really interesting is as price goes up, I think the noise is going up a lot more. So it's like a big expansion of just people trying to sell you on these ideas that may or may not have like some merit to them. But like if you want to just look at Bitcoin itself, obviously there's Bitcoin ETF flows. That's an obvious one that everyone looks at. And then there's, you know, on-chain data. But even then, I think it's more important to really understand the specific activity that's happening within the chain. You know, like with Bitcoin right now, you have, earlier people mentioned there's Bitcoin layer 2s that are getting built out. The only, you know, the major one being like Stacks or something like that. They have a huge upgrade coming up in like a month. And then there's also things like Bitcoin ordinals, which people kind of lean on different sides on how that is, but that's obviously changing the market structure within Bitcoin itself. So for me, I think it's like, it's being super active on chain. It's really active, like analyzing on-chain analytics. And then, you know, one data point, which people feel a little unsure about, but it's Twitter. Twitter is like by far the best information gatherer, but you have to be terminally online to really filter out the noise.
So talk about that a little bit, right? Like as a
happening today is going to be one of the most bullish events that has happened in a very long time for Bitcoin. Certainly the most bullish event that we have seen since the ETFs were launched by BlackRock, Fidelity, and the others. Today, I'm going to show you with some historical analysis why the trend is that within 1 year of a halving taking place on Bitcoin, Bitcoin has always rallied more than 350%. Today, we're going to be showing you exactly how that trend plays out, why it's so important, and why it will help you to make money if you understand it. By the end of this video, you'll understand part of the reason that I'm so confident that this bull market has a lot more room to run. Yesterday, we covered how Bitcoin could drop over the course of the next week. Today, we'll cover how it could go into a major rally over the course of the next year. So without much further ado, let's go ahead and dive right on into it. Incogni, a company online like data brokers. Different data brokers, hundreds, if not thousands of different data brokers that have your personal information. The system. I don't know who has them, and you don't even know how to get it out of the system. I don't have time for that. I'm sure you don't either. But for the low price of $6.49 every month when you sign up for the annual plan, Incogni will do all of this for you and save you thousands of dollars from hackers that can use this information to hack you or to dox you or to put your public address out there online. We'll probably do it again in the future. That premise has worked exceptionally well for over a century. And so when we are doing analysis on what we expect this halving to...
Thanks, Scott, for the support there and the vote of confidence. And back to, what is this? Who is this guy?
We have to look back at the halvings that have been done. There have been 3 halvings so far in the history of Bitcoin. The first took place on November 28th, 2012, and within 1 year of that halving, Bitcoin would rally 9,730% after that first supply shock that Bitcoin experienced. After the second halving that Bitcoin ever experienced on July 9th, 2016, Bitcoin would rally 349% in 12 short months. Following the halving that occurred in May of 2020, we would rally 548% in 12 short months. Disregarding this first halving from our calculations, because quite frankly, Bitcoin began this halving run at $12. We've obviously grown considerably since then. And only factoring into account the last 2 halvings and what occurred following those halvings, we can find that the average rally between both of these markets was a 449% rally. We're simply taking the average of a 349% rally and a 548% rally, and we get an average 449% rally. If we divide that number in 2 and account for the fact that there are diminishing returns when it comes to doing calculations like this, we could reasonably anticipate somewhere between a 100 to a 225% return on Bitcoin within a year following the halving, which again takes place the day this video goes out. If Bitcoin were to rally 225% following the halving event, then we would see Bitcoin pushing up towards $204,000. Within 12 months. Again, we are taking the average of the last 2 rallies, cutting it in half to get $200,000. If we were to rally 449%, the same average that we have had for the last 2 halvings, then Bitcoin would rally to approximately $333,000 in the next 12 months. I do think $300,000 is a little bit aggressive for one bull market, but I've been telling you that $100,000 to $200,000 Bitcoin is almost certainly going to happen this cycle, and this just proves it even farther. So while we very well may be seeing a short-term crash on Bitcoin as a result of the halving, we also might not. I could very easily see it going through a huge rally. We really don't know what's going to happen in the first week following the halving. What I can tell you with a lot of confidence is that the first year following the halving in general, even if the first week ends up being bearish, is going to end up being extraordinarily bullish. So how do we take advantage of this massive movement that is likely to come to Bitcoin in the next 12 months? Well, we do this by investment. The first thing we want to make sure that we are doing is that we are dollar cost averaging into Bitcoin.
Oh, I'm tripping. Sorry about that, Scott. I wasn't even talking. But yes, I don't know what the problem is with Casper, why they don't want to list it. Getting it on Coinbase or crypto.com or Binance would be pretty cool or pretty amazing, especially if you're talking about Bitcoin going to 200,000. Come on, man. Let's freaking go.
On a weekly basis. Every Friday, we are putting money into Bitcoin. First and foremost, putting money into our retirement account. So that's the stock market, but also potentially putting a little bit of Bitcoin into a Roth IRA through someone like iTrust Capital or Bitcoin IRA. There's a lot of different companies out there that'll do that. Following that, though, the same way that after you max out retirement account, you'd invest in a brokerage account, then we would start to invest in Bitcoin on a weekly basis, the same way we would any other cryptocurrency, while keeping 5 to 15% of the weekly allotment that we are putting into that market in cash. That allows for us to build up our cash account as Bitcoin goes up. So if Bitcoin starts correcting here, then we start deploying capital. If Bitcoin did drop down to $47,000, as we've said is possible, that's where we would start deploying maybe 10% of our cash this week, 10% of our cash next week, 5% of our cash the week after, not ever completely depleting our cash reserves that are set aside for investment purposes, but continuing to lower our average cost basis if Bitcoin were to drop down to $50,000. If not, though, we just continue to dollar cost average and we wait until Bitcoin gets to at least $100,000. And then that is where we would start to begin taking profits on Bitcoin that we were holding for the cycle. That's why it's important to differentiate whether we're holding Bitcoin for retirement or for the cycle. If we're holding it for the cycle, then after we pass about $100,000, I'm going to recommend about a 1% withdrawal rate. That means every week, not month, not year, 1% a week, we're going to start taking 1% of the portfolio value every single week. As it seems that we're getting closer to an all-time high, things are trailing off. We're starting to see momentum slow down. Fear and greed's coming down. Sentiment's coming down. Then we start to increase that percentage. We start to say, okay, 2%, 3%, 4%, 5%.
Okay, this is not financial advice, but I do recommend DCA into Casper. It's not a bad, sorry, DCA in the Casper and the Bitcoin. Like you said, kind of like an investment hedge there, right?
A week, and that's where we begin to take our profits out of Bitcoin so that we can cycle it over into our next wealth generation venture. In short, we're expecting an extremely powerful Bitcoin bull market and rally over the next 12 months, and to make the most of it, we want to make sure we're dollar cost averaging below $80,000 to $90,000. After we start getting above $100,000, we flip the script and start selling, but for now, we're still in buy mode, and I'm really excited to tell you guys that there's a lot of opportunity to be made in the cryptocurrency space if you follow the principles of financial sovereignty. And
Yes, Scott, it's definitely gonna pop at some point. But yeah, it's a slow play. Crypto, especially Casper, is the long game, right? A lot of people want to get in and make a lot of money and get paid and buy Lambos and Ferraris, but that's not how it works. It's a long-term push, right? Shout out to AR. Well, what's up, man? Welcome to the live. But it's a long-term push, right? Once you invest, I look at crypto as you invest it, put it in, and leave it, right? Don't even think about it. Don't even constantly check. Like I do check some of them, but most of it I try not to look. During the last bull cycle, I was one of those guys that looked all day, every day. Looked like it's at 63,500. So it's going down slightly. Yeah, you gotta lay it and let it play out. You can't keep looking at it and checking it. It ain't gonna change, right?
if, as a part of that, you continue to invest for the future. But one of the ways that you can invest for the future is by investing in your privacy. The last thing you want is to get doxxed. You know, it's really sad how many of us, our phone numbers, our addresses, our IP addresses, our vehicle identification number on our cars, our license plates, all kinds of crap is out there online that should not be in the hands of data brokers. You've never even heard of most of these companies that have your information. I, as a business owner, I'll go ahead and tell you this. This is scary. I, as a business owner, get emails from these data brokers saying, I've got a bunch of data on different people in business. They're called networking lists, is the politically correct term. And that is people's information that is being sold to people like me, which I never buy it because I don't want anybody's information unless they themselves gave it to me. As a person, I don't give out your phone number unless I verify with you that I'm allowed to do that, because I call that respect. Unfortunately, we call that legal in America. On the other hand, the good news is these companies are forced to delete that data by law so long as they're requested to do it. Incogni can hunt down the companies that have that data, request that they'll delete it, and they can even get it put on something called a suppression lists, which means that that data broker in particular agrees to never hold your data ever again. Absolutely incredible product. I highly recommend it. So make sure to check it out with the link in the description box down below so that you are sovereign over your ID. I do hope that you've enjoyed today's video. If you did, make sure to hit that like button, subscribe to the channel.
That was quick, quicker than I was. Hold up. Yeah, that was quicker than I thought. Yeah, it's my first bull run. I just let it ride. Excited. I'm stoked. So yeah, shout out to Scott there. And you're right. This is the first bull run I wanted to document, right? I wanted to get the live going so we can document and see how it's going. So we'll go back to the having not priced in video. I'm looking for some more new news.
A research analyst, you have what I'll call accepted data points, right? So, simple things, market cap or ETF flows, things like that, which are off-chain metrics, but have an impact. You have the on-chain, and then you do have what many people would consider to be a great source of information. I would say Twitter, but also Telegram chats and some of this stuff. Like, how do you evaluate or put weight on those pieces of information that may not be as quantitative?
Well, I mean, anything that you might see on like Telegram or Twitter, there has to be some sort of fundamental data point that you can point to kind of prove that thesis might be the case. So like, even something like meme coins that have taken off, one key metric you could look at is just like holders on chain. Like, how many holders, is that growing or not? And then sure, maybe you're hearing about certain coins within like a Telegram chat or on Twitter. But is there anything real there or not? Because a lot of times it might just be some Twitter influencer trying to pump their bags.
That makes sense. Mark, you can allocate capital that the institutions give you in liquid cryptocurrencies, venture capital, lending. There's a bunch of different things. How do you think about where to put those dollars?
Really important question. And the cycle exists, and people say, "Oh, it's going to go away." I actually don't think so. I think it's hard coded into Bitcoin, and because of that, you're going to have a period where liquid protocols are expensive or cheap. So we try to follow that cycle, and when they're cheap, when Bitcoin is selling below its fair value, because, oh, what's fair value? You can't determine fair value. Well, you actually can, and there's lots of good models. There's on-chain data. There's Metcalfe's law models. So when the price is 15 and the fair value is 30, we're screaming at clients to allocate to the liquid protocols, but not to trade them. I mean, Robert was talking about this, that there's trading, and there's nothing wrong with trading and high frequency and all that. But we look at it as a expression of a venture capital investment. So, when we launched Morgan Creek Digital back in 2018, our first fund, we could put up to 20% in liquid protocols, and we were in the middle of a bear market, and we sat and we watched the price go from 10 to 6 to 3. And I remember why did we start this business again? And then it started to turn, and that's when we started to hit the gas. But convincing the clients at that point that was a good idea, like, hey, you're venture capitalists, you're not supposed to be buying liquid. And remember, 20% liquid protocols, 80% the equity of businesses around the infrastructure. But at the time then, both were attractive because nobody wanted to put money into the venture capital. So we had our pick of the litter to invest in things like Coinbase and Figure and others. So it was the best of all worlds, but we didn't buy the liquid protocols to trade. We still own the Bitcoin we bought in the first quarter of 19 in our fund one today. Now, at some point we will sell it because we got to give the money back, but, and we own the Ethereum, and we own, well, we sold a lot of the Solana, but we still own some of the Solana. And we own all the Graph. So, but we were making those as Bitcoin at the time was a Series B, like Ethereum was more like a Series A, just means there's more upside. Solana was a seed deal, and the Graph was pre-seed. 97% of pre-seeds go away. That one didn't. Solana went up a lot. Seed deals can go up a lot or not. but it's the relative attractiveness to fair value. So in the current environment, we're back toward fair value in Bitcoin. We're probably over fair value in some of the other coins. So in our new fund 4, we're doing less in liquid, not nothing, but this is the best opportunity I've maybe seen. This is going to be a big statement, but probably in my whole career on venture opportunities. And I think this vintage year in venture is going to be the best one in 40 years.
Adam, everyone wants to know about the Bitcoin halving. Are the miners screwed? Are they going to stop making money? The Bitcoin halving is going to take away half the Bitcoin. What happens?
Today's episode is brought to you by Supra. If you're building anything in Web3 or crypto, you likely need oracles and verifiable randomness.
Yeah, that's actually the question I wanted to know. And it's weird that there's a commercial during this time, because I think that's the question everybody was waiting for. How do you know where to put your money? That's a good question, actually. There's lots of analysis going into that as well. Does it get crazy? I have friends that talk about it, but I figure it's like the last few months have been, but like all the time. No, it's gonna get crazy. Like I'm telling people all the time, when your mother's sister's cousin brother is coming to you at the gas station talking to you about Bitcoin, you know that the bull market is in, right? Oh,
where Bitcoin price moved over the course of the past 3 months has actually dramatically changed the halving coming up. You know, initially when Bitcoin was 35,000 or 40,000, the halving represents a meaningful change to how many machines are profitable on the network. Well, today with Bitcoin above 60,000, the profitability means almost no machines are actually going to turn off during the upcoming halving. Many of them are going to maintain profitability. The interesting part is this halving is a bit different than previous halvings from the perspective of a lot of the companies in our space are extraordinarily well capitalized. And even though public Bitcoin miners only represent about 20% of the
yeah, AR, I guess it's not really straightforward. It's kind of up and down. So it's not really an easy way to know what to invest in, right? There's a lot of options and there's a lot of different cryptos to invest in. But we'll get back to him about the halving, mining after the halving.
hash rate. Many of them are sitting on a significant stockpile of cash, and they'll be able to fund their business. We've actually seen it with other public companies. They'll be able to fund even if some of their machines go negative. They'll want to continue mining unprofitably to show more Bitcoin being mined. You know, that's going to be a big metric coming up, is like how much Bitcoin are actually mining post halving. So my expectation is, you know, probably about 10% of the network's going to turn off this upcoming halving. I would expect most of that is mainly not going to be US based. It's probably going to be in some other locations where the power prices are much higher than where people are at mining in the United States. So the halving is not going to kill everyone, but it is going to make, I would say, about 3 to 6 months post halving a challenging time for a number of companies who are subscale, don't have access to capital, aren't producing enough free cash flow. You know, those are all kind of the hallmarks of what happened in 2022, but it's going to be on a much more sped up timeline, because we essentially had a halving in 2022, not an actual halving, but hash rate went up, it doubled, Bitcoin price went down. And so we essentially just experienced the halving in 2022, and we saw what happened. Smaller miners sold a lot of their facilities to larger miners, and we're going to see something similar happen in 2024. So it's actually going to be a pretty good event for companies that can, I'd say, take advantage of the high volatility that's going to occur post halving.
And then, David, if we extend that, what do you think happens halving wise in terms of price, institutional interest, you know, some of these other ramifications that are outside of just mining itself?
Yeah, I mean, well, most people associate Bitcoin halving with the idea of the 4-year cycle.
Yeah, that's a good answer there, Texas Crypto DCAN. Right now, most profitable mining companies, Bitcoin, are mining Bitcoin at something like 25 to 30 per coinish. I'm currently buying LCX. Shout out to Scott, Texas Crypto, maybe even less. And you're right. I don't think they're making. They might be making. You might be right. They might be making about 30,000 a coin once you figure in expenses and overhead and electricity. The biggest one would be the electricity. But even at 30,000 a coin, if you're pulling down what 5 coins an hour?
I can't, this is the first, at least empirically, this is the first year where the 4-year cycle historical norms have been broken, right? We got an all-time high pre-halving. So to say like the Bitcoin halving is going to have a similar impact to price.
Yeah, so if you per se, if you get at least, let's say 25,000 per coin times you get 5 coins in an hour, that's 125,000. So I don't know how likely that is to hit 5 coins if you're mining, but these guys have super warehouses mining Bitcoin. So I don't think that would be unheard of, but it has to
I
be
don't know if that's necessarily going to be true.
some kind of
And then on top
profitability
of
in
that, I
it.
think
These
if you
guys
just
are
look at,
still
say,
building mining
if you just look
facilities.
at daily volume of Bitcoin, which is, I think I looked today, is like 40 billion, and daily inflation on Bitcoin itself is roughly like 50 to like 100 million. So I don't really see that having much of an impact other than just driving like media attention on top of already having a pre-halving all-time high. But it obviously has a way bigger impact to Bitcoin miners than it necessarily does to Bitcoin itself.
David, you're not going to give us a big number.
Compliance.
I don't want to push back, but I want to extend that idea just a little bit. And that I actually think the halving is going to have a bigger impact, and I don't think it's priced in. And I think people are distracted by the demand shift that happened that caused this all-time high, and so they're forgetting that when the halving occurs, the supply of block rewards gets cut. And despite the points that not as many miners will be in trouble, there will still be miners who are.
Yeah, check this out. And this is in Dubai, right? And this guy's making 200K a day. Check this out.
For it all.
I was born with something inside me that refuses to settle for average, and am grateful for it. I am a warrior, a destroyer, a force of pure violence, and all that I desire is the sheer glory of victory.
Are in trouble because their costs are fixed and the number of rewards goes down. And so there'll be a supply shock event, and how supply and demand work that.
A cryptocurrency mining facility is being built in Muskogee. Leaders.
Here's one in Oklahoma. I'm looking for that one in Texas. It's in it's like some small town in Texas. It's one of the largest in the US.
With the Port of Muskogee say it represents a $100 million investment and will bring dozens of good tech jobs to the area.
News on 6's Matt Ron is live with why the company chose to build its facility there. Matt?
Greg, Lori, a 200 megawatt data center needs a lot of power. That's why Oklahoma-based Polaris Technologies will bring their center to John T. Griffin Industrial Park in Muskogee.
The data center is mostly made up of these containers that house supercomputers, tasked with the job of solving complex puzzles in order to mine Bitcoin, a process that uses a lot of electricity.
That is our control room.
Polaris Technologies COO Alex Jung says it will come from a near.
Wait a minute. Polaris is building Bitcoin mining facilities? Yeah, no, I see it. I think I'm going to pull that video up next.
By OG&E substation.
Substation over there has a 1 gigawatt capacity, so we are not using all of them. We're just using part of that.
The data center will be capable of using 200 megawatts of electricity at peak demand. For context, a Walmart supercenter only uses 1 megawatt. Jung says to keep the stress on the power grid low, they will turn off the supercomputers to save energy during peak demand.
When the residential really need that energy, we'll stop operation and get this energy back to the residential one.
It's not just servers in a container doing all the work. Jung says 20 employees will be hired by the time phase 1 is complete this April.
Another 20 full-time employee by the end of this year when we complete the second phase.
There are also plans for a repair center that will require around 20 highly trained technicians.
Well-paid and really welcome local folks to get on board, and we'll train them and get them
Looking like I'm moving to Oklahoma. What do you guys think?
paid well.
Jung hopes to make a positive impact on the community with this huge project. He says he is excited to work with local talent.
Now, phase 2 of this expansion will add another 200 megawatt facility, creating another 20 jobs. Matt Ron, Oklahoma Zone.
That is crazy. That thing's taking more power than several Walmarts. And I think I found it, guys. This is largest U.S. Sorry, this is the largest U.S. and the largest U.S. mining facility in Texas.
New Nexus Amino Bond. Repair 5 types of hair damage in minutes. With 5 amino acids that penetrate hair at the deepest level, rebuilding broken bonds and generating new ones. For your healthiest, strongest hair. Nexus. See the science.
I suffer with psoriatic arthritis and psoriasis. I was on a journey for a really long time to find some relief.
Bitcoin hit $1 trillion market cap this year. This has inspired some Bitcoin operations to expand, especially in the wake of the recent government crackdown of miners in China.
The ban on mining in China has caused a mass exodus to the United States, to Russia, and to any other areas where mining facilities are available.
Welcome to Rockdale, Texas, America's new crypto mining hub.
This building that's directly behind me, inside of the building.
Yeah, Scott, the commercials are killing me. But I do have premium. I don't know why I don't have it on this account, actually. I need to go ahead and switch that over. But yes, this is one of the facilities.
Buildings. We have this shelving that's 1,000 feet long, 20 feet tall, and there are just miner after miner after miner after miner.
We went inside North America's largest Bitcoin mine to understand how it works and its energy footprint.
What is a miner? It is a small computer. They call it an ASIC miner. It is made to solve problems, and when they solve that problem, it feeds into the Bitcoin network. When it feeds into the Bitcoin network, you receive a reward.
To help us understand crypto's reward system a little better, we spoke to blockchain expert Bettina Warburg.
That's what mining is. It's a process by which people are contributing computing power and earning a reward for essentially participating in this process that secures a network. everybody's using the same software that allows them to connect together and participate in a governance structure that's shared.
It seemed like only yesterday that one person with a handful of computers crunching numbers in their apartment could make money from mining Bitcoin. So how do we go from there to here?
Just like with many industries, you start small. The guy in the garage started the process. He mined Bitcoin. I believe the reward was around 50 Bitcoin for every block reward. Now it is at 6.25.
In some ways, cost equals energy
The guy in the garage, I think they're talking about me.
expenditure. This is just the nature of technology. We see updates and innovation and people driving margin and driving their cost of operation down in order to reap the greatest reward. So you get mining operations that happen in places
The ban
where
on mining
power
in
is less
China
expensive.
has caused a mass exodus to the United States, to Russia, and to any other areas where mining facilities are available.
Welcome to Rockdale, Texas, America's new crypto mining hub.
This building that's directly behind me, inside of the buildings, we have this shelving that's 1,000 feet long, 20 feet tall, and there are just miner after miner after miner after miner.
We went inside North America's largest Bitcoin mine to understand how it works and its energy footprint.
Expensive.
Typically, mining operations go where energy is cheap. Right now, Texas has some of the lowest kilowatt-hour prices in America. That's due in part to a deregulated energy market, which means several providers compete to snag big customers like Windstone.
So there's environments like Iceland, Russia, China, Canada. Areas like Iceland and Canada have a cooler environment. There's probably less dust in those areas. The miners run at a cooler temperature.
Cryptocurrency is about the low-cost provider. Texas is becoming a hotbed for other cryptocurrency facilities.
In fact, Shenzhen-based bit mining is coming to Texas, and Beijing-based Bitmain, a company that designs circuit chips for Bitcoin mining, is moving into the decaying aluminum plant down the road from Windstone. According to the Oak
Texas
Ridge
crypto, I was
Institute
telling
for
you,
Science and
Texas
Education.
is going to become the crypto hub pretty soon, right? See if this, I think we've seen this video already. Let's shoot this real quick. Yeah, Scott, that's actually a good point. And I would love to win the lottery and build my own mining facility somewhere out in West Texas. But I don't know if my family would like to be in the middle of West Texas.
$1 worth of
and a Dust
Bitcoin
Bowl.
takes 17 megajoules of energy to mine. That's more than double the amount of energy it took back in the day to mine $1 worth of copper, gold, and platinum.
The machines require more power, and more power requires larger capacity, bigger transformers, higher voltage.
Ultimately, the energy intensiveness comes from the fact that solving these mathematical puzzles is challenging, and you have to expend a certain amount of compute power against it to be the fastest one to actually solve the puzzle. And putting as much computational energy into that challenge as possible increases your ability to actually win. It's intentionally inefficient.
Each building is 100 megawatts. For each 100 megawatt building, you can fit 30,000 new ASIC miners in it. In a Bitcoin mine, the consumption is basically taken by the miners. Each miner has about 3,000 watts that it's pulling. An older miner, an older generation, the S9, which was released in September 2017, was only pulling 1350. The miners now are at 3000.
So at capacity, this facility will have 750 megawatts of electricity flowing through it, enough to power 150,000 Texas homes during peak demand. That's a lot of juice. How do they manage to keep all those miners cool?
Our ideal goal is to keep the ambient temperature around 81 degrees. There's a lake about a mile from here. And so underground, we have a 8-inch line with 1,000 GPM pump where we pump literally the water through this mile-long pipe into the facility. And it actually goes into holding tanks that then recirculate the water, and it pumps it back into these evaporative cooling walls that are 12 feet tall. Water is actually dripping down the wall of that evaporative cooling cell. And then as the air comes through it, it actually cools from 16 to 20 degrees difference between the front of the wall and the inside of the wall. The miners have fans, they have intake fans, and there's thousands of those fans running, and they actually suck the ambient air through the miner, and then there's an...
Yeah, right, Scott. This is very impressive. And this is enough power to power 150 homes. There's going to be some serious electricity crunch crisis in Texas pretty soon, unless Elon finds a way to fix the grid between the space station out in, I guess that's West Texas too, right? And these Bitcoin plants popping up, and the one in Oklahoma. Texas is going to be a power super hub pretty soon.
Exhaust fan actually pushes the air through the chips and into the heat aisle. As it goes through the miner, it then heats up because the chips, it's a processing, so it gets really hot, and then we capture the heat on the inside of the heat wall, and then it is evacuated out of the building through a quote-unquote chimney-like environment.
Inside the heat aisle, it literally feels like an oven. One Windstone employee estimates that it can get as hot as 140 degrees Fahrenheit in here.
So the S9
That'd be crazy if you get stuck in there. Forget getting stuck in the freezer.
has a hash rate of 13.5 terahash. The new S19s are 110 terahash.
Hash rate measures how many computations a miner can do, usually in a second. So how much money can each miner potentially make each day?
Currently, a S19 with 110 terahash, the profitability every day for one machine is 30 USD.
Okay, so $30 times 30,000 miners times 2 big buildings, nearly $2 million a day for a facility this size.
We have a full staff of 120 employees. We work 24 hours a day, 3 shifts.
There are definitely some increased efficiencies on the horizon, such as faster processing chips for the miners, cooling them in immersion technology, but at approximately 73 terawatt hours.
$2 million a day? Wow. Yeah, Texas's grid is by itself. That's why we had that outage that Winter Getting a couple of years ago. I remember sitting in the house cutting up my table, trying to keep warm, or sitting in the truck all day. But yeah, definitely they fixed the grid because we were pretty good last summer. So hopefully this summer we push on through again and they add on to the grid and get the backup power situated.
Hours annually. Bitcoin's energy consumption is more than the energy it takes to run every single television set in America.
I think ultimately the energy consumption question is a bit of a what is it relative to? When we look at our financial system as a whole, or even just Wall Street, to power Wall Street, which runs almost entirely off of computation today anyway, and high frequency trading algorithms. When you look at mining just to earn Bitcoin, well, that's not necessarily so awesome.
According to the Digiconomist's Bitcoin Energy Consumption Index, one Bitcoin transaction takes more than 1,500 kilowatt hours to complete. That's more than 50 days of power for the average US household.
Bitcoin is what I like to think of as a calculator. So it's this sort of old school, very clunky system that gets the job done. When you look at what's happened with newer blockchains like Ethereum 2 and Definity, is that they've actually implemented a totally different system for essentially doing the same thing. And Ethereum is upgrading to more energy efficient way of securing the network. And the future will be about a lot of these different internet computers battling it out for adoption. So you'll see Dfinity, Near, Flow, Polkadot, all kinds of networks really serving as the optimal.
So that was some about it, and I got another video from my main man, Hobbyist Miner. Let's see what he's showing us about the facility. Actually, before we get into that, let's check the prices real quick. And we can come back to, let's see where we're at. Bitcoin is now 63,519. Down 0.71%. Still up 2.38% for the day. So I don't think there's going to be any big movement tonight. Maybe a little later when the European market wakes up and the Chinese market. Yeah, to hell with Ethereum. And that proof of stake. I wish Ethereum would had kept being mining. I wonder how much Ethereum would be worth now if they didn't go to proof of stake. Because I had a pretty good run towards the end on mining Ethereum with GPU miners.
What is going on, miners, and welcome back to the Hobbyist Miner channel. Well, in today's video, we are at Fraction Mining's containing farm in southern Texas. What is going on, guys? So I am here from Alex with Fraction Mining. How's it going, Alex?
Good, man. How are you?
Good. So we're down here in Texas at their container mining farm. So Alex, tell me a little bit about this facility. What kind of megawatts are we running? What are you guys kind of hatching here?
Yeah, so we've got this, our portion of the site here is about 5 megawatts.
Okay.
So predominantly, as you could tell a little bit, it's a lot of wind around here.
It's awesome. The wind turbines, you see them everywhere.
So many. And even on the 30-minute drive here, it was just like wind turbine, wind turbine, wind
We're in the
turbine.
middle of nowhere, by the way. I just want to put it out there.
Just a little bit. And so most of what we've got here is Bitcoin.
Okay.
We've got some Cadena mining. We've got Litecoin mining from some clients. And then we recently launched Caspa mining. So we've got close to 100 terahash on Caspa.
All right, Alex. So here at Fraction Mining's facility in Texas, what type of mining are you guys doing here? Because from our
100 terahash on Caspa. That's why I'm not making any money. This guy. We might need to go down there and see what's going on with his Caspa miners.
conversations, there's about 3 different types, right?
Yep. Yeah, so what we have right now is we have our client hosting. So we've got several clients, some larger clients with 200 miners plus at this facility, and then we've got people with just 1 or 2 miners as well. Most of those are Bitcoin. So a lot of clients come in, they want to buy a miner from us. We'll set them up with a deal, and then we'll get them hosted.
Oh, so you have the whole spiel of your purchase and also hosting. Okay.
Yeah, so it's a very smooth process. We're not very public about it because we have how we want to set things up.
Actually, you know, something funny. I think I talked to this guy before. When they first set this operation up, they were doing public hosting where you could send your hardware down there and they would host it for you. So I might have talked to this guy.
We want to get a good customer base. We want to get to know, like, hey, what are the things we can improve on before we really start publicly marketing it.
Well,
And
tough
so,
luck. You're now on video.
Yeah, I
talking
know,
about
right? So, but for now, especially with our limitation on 5 megawatts here, we really want to get to the next place, and we'll maybe talk about that later on as far as some of the other sites that we have.
Awesome.
But client hosting, we also have a bit of self-mining. Most of that is predominantly, we have some Bitcoin miners here.
Good for you guys.
And then we have, as far as fractional mining, where we're able to fractionalize the hash rate for those that are wanting to get into mining, whether that's Bitcoin, Cadena, or Caspa, at a fractional cost. Obviously, a Caspa ASIC, a very efficient one, costs $20,000, and everyone has.
As a home miner, you're like, oh, that's
a car, right?
Yeah.
So, you know, not everyone has 20,000 for the most profitable Caspa miner. So we're able to take the idea of fractionalizing that hash rate and ownership to individuals using the technology of an NFT. So that's the unique process. We've done that for Bitcoin. We've done it for Cadena. We just recently did that for Caspa. So that's kind of like the third part of what we're doing.
All right, Alex, so you guys are running 2 different types of containers on your farm here. Can you tell us a little bit about each?
Sure. So behind me here, you've got the amp box. This is what was originally designed by Bitmain.
Okay.
So very, very simple. It's definitely on the cheaper side just because it doesn't come with exhaust fans.
Okay.
So
you're using natural pass-through with
natural
the ASICs.
cooling. So what we're going to do is we're going to add fans on the back end. It's designed where you can have fans just for when Texas summers really do hit. You want to have that extra
Dude, it's hot.
cooling
I came from
factor.
Pennsylvania. It was 40
when
I left yesterday morning. It's like 90 some out here today.
90 something. Yeah. So that's the amp box. It's a 20-foot container, so it hosts about 209 miners or so. And then behind us, this is just an extra container, but we've got 2 over here called 1MW boxes. They're 40-footers, hold about 324 miners. So they're designed literally right out.
I wonder if I can throw one of these in my backyard. One of my neighbors will be really upset about that.
1 megawatt worth of capacity of ASICs. So from a dollar cost standpoint, you really do go better with a 40-foot container just because of the footprint that it takes up, the amount of miners you can get in for having like 2 or 3 of these, especially when you consider transformers. So, because if you think about it, with something like a transformer, you're limited to so many megawatts and so many containers. So you have to you need so much room inside the transformer. So there's a lot of planning that goes into it, but really do like the amp box. Once it gets fans on it, it's going to be perfect. Okay,
and did you guys start out with the 20-foot amp box? Is that kind of where you started and then moved into the 40, or what was your mindset?
Yeah, so we actually started with one back here very, very early on. We all actually call it custom made. We call it our craptainer, but it was really a learning experience. It was our very first container we had out here. The design was a Vortex V-shaped design. So the cooling aspect wasn't ideal for what we have here. We're going to ship that up to our Canada facility.
There you go.
But we started off there, kind of learned a few lessons, then moved up to the amp box, upgraded from there, and then now we're really at the big boy stage with the 1MWs.
Thanks for swinging by, Carl.
What are all those for?
This lets me adjust the bass, add more guitar.
Wow, so many choices.
All right, Alex, so you guys offer hosting here at Fraction Mining, and not just at this site, but at multiple sites. Tell me a little bit about that process. So I come to you guys, I either buy an ASIC or I have a number of ASICs. What does that process look like for you guys? What's some of the offerings that you guys have?
Yeah, so for most of what we've done it predominantly in-house. We're not really all too promotional yet on what we offer as far as hosting, but for everything that we do in-house, predominantly most of our clients' miners, or almost all of them, are here in Texas. Now, we have a Canada site. That's one major client specifically up there. And they're on a natural gas flare site. But all of our smaller clients are here in our Texas facility. So typically the process looks like for most of our clients is buying and hosting with Fraction. The reason is we know that's a new miner getting installed. We know we're not going to have 20 hardware errors when it gets shipped in. So from a smaller operation size where we are here, we want to make sure we don't have any of those issues.
I get it.
So for a lot of what we've done, we started with the S19 Pros. We're doing K Pros now, which I think are some of the best miners by Bitmain, much better than the XP. So we have some clients having purchased some of those. So what typically happens, the client reaches out to us, says, hey, I want to buy 1, 2, 3, 4 miners. If we have the room, we'll go ahead and buy it. It gets turned on essentially sometimes even that day if we have it in stock. So worst case scenario, it may take about a week, and then they're fully operational. So our rate here, depending on how many miners you're bringing in, is anywhere between 7 and 7.5 cents.
Okay. And what all does that entail from the customer side? So what does that get you?
Yeah, so that's management. That's everything that gets you access to fiber. That also gets you access. We work and partner with Luxor firmware.
Okay.
So we're able to upgrade your device if you want to run on Luxor firmware.
Oh, nice.
We'll go ahead and install that firmware for you without cost. So there's kind of that bonuses. And then we also have on-site management. So we have a guy here repairing so if your miner goes down, you don't have to worry about it being a remote facility.
Yeah.
No one around, and you may take a week to repair. So
yeah, guys, that's very cool. That like not all farms have an on-site staff member.
Yeah.
And I think that separates you guys quite a bit to have an actual operational manager on site, managing day to day. I think that also allows you guys to turn up new customers faster, keep up with maintenance, things like that.
Yep.
It's not like you have to wait for somebody to fly on site, which is awesome.
Yeah, exactly. So that's some of those perks that a client may not see right away, but when they need it, they have it.
All right, so we're in front of your 20-foot container. Let's talk through this unit here. So what all are we running inside of this unit right now?
So right now there's predominantly probably around 80 WhatsMiner M50s.
Wow, okay.
So we've got some WhatsMiners in here. We've got S19 Pro 110 terahash.
Okay.
Some of them running on Luxor firmware. A lot of them running on Luxor firmware. And then we have S19 J Pro Pluses, mostly 120 terahash. And then we got a new batch of S19K Pros, super efficient.
Hey, you want to know why you're constantly bloated, tired, breaking out, and can't?
Hi, my name is Pierre Rochard. I'm the Vice President of Research here at Riot Platforms. We're here at our Rockdale facility. We've got guests from ERCOT and from Texas A&M University. We're going to show them around, show them what an industrial scale Bitcoin miner looks like.
Back to the
We're at
Rockdale
Building
facility.
D. We're visiting this building because it's an air-cooled building. So this is a great example of the world-class engineering we have here at Riot. We're in Building F, an immersion-cooled building out here in Rockdale. We want to show to ERCOT and Texas A&M what the cutting edge of the industry looks like in terms of cooling technology, really highlighting the quietness of this building, as well as the improved efficiency and durability of the equipment. An important aspect of industrial scale Bitcoin mining is participating in grid services so that when there's a lot of stress on the grid, we're able to power off buildings like this one, give that electricity back to the grid. What I really enjoyed about this visit was getting to hear the different perspectives, getting to hear from Texas A&M about their research on Bitcoin mining and the grid.
So you see there's a knowledge gap between people who understand the energy world, people who understand the computer and programming world, and people who understand the finance.
Yeah, actually, I was talking to someone about that a couple of days ago about how a coworker of mine's son was mining Bitcoin, and I think he had 500 Bitcoin. The dad sold them at $25 a Bitcoin. I think it came to like 20 grand, 15 grand or something. I don't remember the math, but the guy used the money from 500 Bitcoins and bought a camera, a very expensive camera at that. But a friend was like, I bet this guy wanted to kill his dad. So I don't know, but definitely crazy to be Bitcoin mining on a personal computer. And it went from that to freaking Epcot and Texas A&M visiting a Bitcoin mining facility in South Texas, right? Or wherever Rockdale is.
The students who are sitting here are going to be the first cohort, hopefully, who really understand this.
And we also got to hear from ERCOT's perspective with regards to large flexible loads here in the state of Texas. So all in all, I think it's really important to have dialogue, to have education from different stakeholders.
But I guess the good thing about it is you wouldn't need a lot of power in the wintertime to cool the miners, right? So that's probably going to keep the electricity costs down as well. I'll actually look at some numbers versus more mining there. Let me see here. Where are we? Okay, here we go. Yeah, I was actually talking to someone about that as well. There's probably billions of dollars sitting around on old hard drives and junkyards and zip drives and backup PC hard drive. I know for a fact I got 5 Bitcoin sitting on a hard drive on a computer I threw away, I don't know, 8, 9 years ago.
Hello and welcome to another update video about Bitcoin. Yeah, Bitcoin hasn't really done much today, rallied into resistance, but only in 3 waves. So we don't have a confirmation that a low is in place. I have to say that very clearly. Probabilities are not clear until we get a first 5-wave advance. A correction is only over, if we get if we get an impulsive or at least a diagonal pattern to the upside. That means we need to have a 5-wave move and ideally one that breaks above resistance. At the moment, the price is holding resistance at 65,428 and the rally was only in 3 waves. So we take a look at that shorter time frame wave count in a minute. Quick explanation here of the overall structure. We're dealing here with a WXY pattern. So from that swing high here in around the 14th of March, we had a wave WXY. That's the white count. Allows definitely for one more low, possibly to 57,500 or even 55K. And this is a scenario that remains valid as long as we only have 3 waves up. That's really, really important, okay? I've been looking for 3 waves or for 5 waves here, but we only had 3, so I could never confirm a low. And you see how important that is, because it all broke down again, yeah? It all broke down again. So we are dealing here with a situation where in the WXY pattern, one more low could absolutely happen. There is a scenario, as I said, this ABC structure in which the low could have formed here on Friday. I'm very open to that idea. I mentioned to you already this week that with this additional low that we've seen here on Wednesday already, I actually start to like this structure, this bottoming structure. It tells us that, okay, we have a nice 3-wave move. We've reached a 100% extension level, which is the, well, first ideal target for this C wave to the downside after the A wave bottomed here around the 20th of March. So we have enough points that we can use to consider, that possibly a low is in, but we need a 5-wave move above resistance for at least the first indication that a low is in. Until then, we haven't got anything, right? There is not going to be any indication. So before we go to the smallest time frames, as soon as we have a low in place, we should see the price surge to around about 90K. Obviously, I can't confirm a low yet. I'm not calling a low is in place, okay? One more low has to be considered. All I'm doing is tracking a potential 5-wave move up so that we can understand what needs to happen for us to consider that a low is in. I mean, I'm considering it, but more like confirm it. So that's very important difference. Technically speaking, the price could easily drop to 55.4K, which is typically the ideal target for a 4th wave. Now, I consider the entire area relevant, the entire orange support zone, and use the microstructure to determine when a low could be in. But of course, if there is a sudden sell-off or something, the price could use the entire orange zone without invalidating the overall bullish thesis on the Bitcoin chart. So let's go to the shorter time frame. By the way, a few people asked me if I could, say something about the halving. I don't know what I should say about the halving. I mean, we had member live streams about.
Pause this video. I just found something else wanted to click on real quick. So we'll see about more technical. See if we can come back to this one later.
Bitcoin halving alert. It has happened. Block rewards have halved. It's a new season. With it comes I have a new little studio, little new office here. I'm really excited because the winds of change, I really think when it comes to crypto, they are here. Block rewards have halved, but we all know price will probably continue doubling. We don't know. We don't know for sure, but I'm going to actually talk about that in this video. I want to look at charts. I want to talk about what this means for Bitcoin. And I really just want to get some historical context as we go into this new season, this new era. The 2024 halving has happened. It's crazy how fast time has gone by since the 2020 halving, but we're going to break it all down. I want to talk about a couple of narratives as it relates to Bitcoin that I think we're going to see a lot of in this new season. And I also want to talk about altcoin season as well. So hit the subscribe, hit the like. Let's jump into the video. So this is Bitcoin zoomed out on the monthly. And before we talk about different narratives when it comes to Bitcoin this season, this next 4 years, I just want to provide some very simple data. This is how things have transpired through the cycles. If we look back, 2012 halving, 2 all-time high, 10,000%. We go to the next halving in 2016, 2 all-time high, 3,000%. We go to 2020 halving in 2020, May of 2020, 2 all-time high, around 600%. You see the diminishing gains throughout the cycles, and that's normal. Now, here we are, and we're in 2024 halving. It just happened. We're going to have a lot of time to speculate. We're going to be speculating about where Bitcoin and crypto can go this cycle. But if we just say, and this is just very simple data, 100% gains, diminishing returns, we all know that. This cycle, $125,000 Bitcoin. A lot of people could be happy with that. That would be pretty good gains. What would 200% look like, right? 190 to $200,000 Bitcoin. There are price speculations all over the place, from like $100,000 up to like $1 million. And so that's why I'm saying we have time for that, but you get the sense of the trajectory that Bitcoin has been on. Now, Bitcoin halving has happened. Check out the search trend on Google search. Just look at it. Here's last cycle, 2020, May 2020. Here's the 2016 halving. Just look at this. There's more and more eyes on Bitcoin, on crypto every cycle, and we can let these crazy clickbait headlines just take over now. Bitcoin suddenly braced for a $35 trillion halving price earthquake. I'm not going to read the article because it's pretty ridiculous, but this is what we're going to start seeing a lot of. Now, in terms of the narratives that I want to talk about, and then I do want to go and I want to actually zoom in on the daily chart, every halving, to get a sense of what might be next for Bitcoin price in the short term. But before we do, 2 things I want to discuss. Number one is this, the Bitcoin ETFs. We've already had that narrative in play for months now, leading into the spot Bitcoin ETFs, right? Being approved. So much hype, so much speculation surrounding that. And then it happened. And this is truly going to this is really going to play into that supply shock that we talk about surrounding the Bitcoin halving, right? Now we have Hong Kong in play. Hong Kong Bitcoin ETFs to start trading by 30th of April and could bring in $25 billion. And I just saw this post. Bitcoin is going to $150,000. ETH is going to 10,000. Altcoins will pump 10x to 100x. This person over here on X, I think this thought, these 3 simple lines, a lot of people in crypto really just think that. And I would say I fall in that camp. I really do. ETFs are buying billions every week, and now more and more countries are approving ETFs. In next 12 to 16 months, you will make life-changing money. That depends how it's played, right? That depends how the game is played. This is an incredibly risky game, right? And this YouTube channel is just me tracking my crypto journey. You are seriously not bullish enough, they said. So Bitcoin ETFs. This is a narrative that this is not over. I really think this is just beginning, and it truly plays into the demand that is pouring into Bitcoin from a global perspective. This is just starting. And the other narrative, I really wanted to bring this up. I'm not going to spend a lot of time on it, but I wanted to throw it out there because I'm incredibly interested. I've been incredibly interested since Bitcoin ordinals were launched like last year. Bitcoin runes launch at the halving. Here's everything you need to know. I'll put a link in the description. You can read through if you want, but
Go ahead and hit the like, share, and subscribe. And he's right. This narrative is running rampant.
Creator of Bitcoin ordinals, basically NFTs on Bitcoin, is debuting a new fungible token standard to rival BRC20. Very simply, just picture just tokens, all the tokens mania that you see happening on Ethereum, on Cardano, on Solana. Picture that happening on Bitcoin. And Runes is here now, making it way easier than what they had with BRC20. And they're using UTXO for this protocol, the Runes protocol. And this is just going to be not just with Bitcoin. This is going to be, I truly think, I could be wrong, will be one of the largest, most bullish, hyped up narratives this cycle. Now that Bitcoin halving is here, especially. So I'm going to put a link in the description. I wanted to throw it out there for you. I realize many of you may not be interested, and that's cool. I'm very interested in this, and I think there's a lot of opportunity there. So I'll put a link in the description if you just want to check it out, read about it, and now we can pivot to the charts. And then I want to talk about altcoin. I want to talk about altcoin season because this new season, Bitcoin halving happening, it is so important to what happens with altcoins next. Finally, we are here. So here's 2012. This is just very short-term data pieces in each halving to give a sense of what can we anticipate. And unfortunately, there's not 100% consistency. Here's 2012 halving, and it's very simple. Bitcoin from the halving, this was, what was it, November 28th, I guess it was, never went lower, just to give you a sense. Bitcoin never went lower from that halving to the next all-time high. And we're talking about it just was at $12 and it never saw $12 again. So that's 2012. If we go to the next one, this is the halving of 2016. Bitcoin, you can just see, was sideways right after the halving for looks like a couple weeks or so, and then just big fall off, 30% to the downside. That was 2016 halving, huge bounce, and then guess what? Bitcoin never saw that $500 range ever again. Now, if we go and we look at the last halving, 2020 halving, very sideways, right? Here's Bitcoin halving, May 11th, 2020. It pretty much really never went lower. It looks like maybe a couple weeks later, it tested that area where it was at Bitcoin halving, but it was up. It was up from there, right? And that was around $8,000 or so, $8,000 to $9,000. And then, as you see, Bitcoin just never went to that price again. Now, here we are again. Bitcoin, the halving has happened. I need to move this over. The halving has happened, and we are here at $63,000. You can see how it wasn't every single halving in cycles past where Bitcoin just never went lower. 2016, it did go lower by like 30% or so. But other than that, it has been a really just starting line for Bitcoin to just continue higher, to continue to all-time highs. But I think one thing that we did see, whether it was just up only or not, that 30% downturn, there was kind of consistency in the sideways nature of it, right? And I think maybe that's just markets being like waiting, on standby. What is Bitcoin going to do? So this is a whole new territory, right?
Go ahead and hit the like, share, and subscribe button. Everyone's still here for this Bitcoin halving I guess anniversary day, birthday, holiday, celebration. I don't know what to call it. We're gonna keep rolling.
Right? Just because these things happen in cycles past doesn't mean it will happen again. But I think that gives helpful data in terms of the macro, in terms of why when we do go to a Bitcoin monthly chart like this one, it really does seem like after every halving, Bitcoin enters a bullish environment. And I think we're on pace again. There could be a lot of things in play from a macroeconomic perspective that might throw that entire consistency off the railroads, right? Something could happen in this world because the world, I think this cycle around, it's just the craziest it's ever been. It's a very scary place. It's a very sad place. So anything can happen, and I always want to be prepared for that. But the data on the charts, putting those things aside, Bitcoin is primed because of the supply shock, because of the inflows, because of the interest that is here. What this means for altcoin season, this I think will be massive. And you know, I covered this post over here on X. Altcoins will pump 10x to 100x. I think a lot of people have been living in this environment in crypto, if you've been in crypto, because the Bitcoin spot ETF really did bring some hype and some anticipation. We saw Bitcoin just make some really solid technical analysis type of moves that it had never made before, right? We looked at the price charts, Bitcoin breaking the bull market door area right there before the halving. Every cycle before that was after the halving is when that happened. That has already happened. So I think because of that, a lot of people have been kind of living in this world where if you look at a Bitcoin dominance chart, they're thinking altcoins should be exploding. Altcoins should be at all-time highs. Altcoins should be just outpacing. And I just don't think, if we look at a Bitcoin dominance chart now, I don't think we're there yet. But this is what's great. Now that the Bitcoin halving has happened, here it is, the Bitcoin halving, we can really start analyzing Bitcoin dominance now. So a couple things. Last halving, you can see Bitcoin dominance at halving actually started to fall. It got one just swing high right there. And that was really just going right into, this is the bull market doors being broken at that time last cycle, Bitcoin making a move. But you can see there's altcoin season, right? And then you go to the cycle before that, here's altcoin season. Just notice, this is a weekly chart. So this is months after Bitcoin halving, months after Bitcoin halving, 2016, 2020. That's when altcoin season kind of has happened. Now we're at Bitcoin halving. Could it be months? If history repeats, yeah, it could be and it will be. Maybe it happens sooner. But on the Bitcoin dominance chart, now that halving has happened, this is getting very exciting to watch. And the reason why that is, and I'm just going to move this over. The reason why that is because I very much think Bitcoin is putting in its lower high. And I don't know if it's in yet or not. You can just see this kind of, it's been trying to break out of this range. And this has everything to do with altcoins, trying to break out of this range, which it did in like the last week or so. And we have this Fibonacci, this lower high Fibonacci. So it's a swing high to swing low. And it's just this green rectangle up here, that entire area that's been in play for Bitcoin dominance. And maybe it is the months ahead where Bitcoin dominance makes that run to that area. Maybe it's, like this, and then altcoin season. Maybe it doesn't happen. But one thing I do know is the dominance chart is going to be the roadmap for altcoin season for me, and just going to continue monitoring it. If I get rid of this Bitcoin halving line because it's making it hard to see, you can just see Bitcoin has some momentum on the dominance chart, right? So will be very fun to watch because this is the roadmap for altcoin season. If I don't know what altcoins you all hold out there, but if you're holding altcoins, I truly don't think we're there yet in terms of why are we not breaking all-time highs? Why is Cardano, for instance, not breaking all-time highs? I posted months ago, I think it was February. I don't even think Cardano was going to break $1 before Bitcoin halving because it just wouldn't make sense from a historical data perspective. And that's what I'm saying. I think the best is yet to come for altcoins. And this Bitcoin halving that has happened now, I think is a really nice indicator that we are entering that new season, and now we can start watching. So let me know your thoughts in the comments below, everybody. I appreciate all of you. I hope you're having a good start to your weekend. I hope you have a good weekend. Hit the subscribe, hit the like. I'll see you in the next video. God bless.
Tired of waiting months to get the team you need? Build a flexible workforce.
So let me know what you guys think about that prediction as well. Thanks for joining the Bitcoin halving celebration. And let's see here where we want to go. I think I had something else to check out. Wow, 4 hours? Interesting. For a quick hitter, real quick. See, what is this? let's go back to this guy's then.
The price is going to rise. Fair value has doubled in each of the previous halving cycles. Now, I don't think it'll double this time because now we have inscription fee.
I'm actually working on a CPU rig, so I'm just listening like you guys. So let me know. Don't forget to like, share, and subscribe, and comment, and we'll keep it rolling.
Fees related to ordinals. And so instead of going from 50K where fair value is today to 100, I actually think we go probably to 80-ish, but we're still below 80. So once you start going toward that new fair value post-halving, then the FOMO kicks in. And once the FOMO kicks in and you get the increased adoption from the demand shift on the Bank of America and Merrill Lynch and the thundering herd finally getting approval. Like, I still can't buy the ETFs at UBS where my Family Harmony account is because my brother-in-law works there, but eventually I will. And I think all of that's going to push us to a very different price level.
Don't you think the FOMO's already here?
Oh, I don't think the FOMO's even started. I mean, look at search activity for Bitcoin. It's very low. Look, this is a echo chamber. We all talk to each other and on crypto Twitter, how smart we are and how great. But the average person, again, my family members aren't calling me yet. They will. This Thanksgiving, by the way, this is going to be the most awesome Thanksgiving. You're going to be invited back. And it's going to be awesome.
David, one of the ideas, so obviously halving is a big kind of catalyst. Are there things that in your research you look at either as risks or potential moments or developments that people should be paying attention to that if they were to come to fruition could actually be negative?
I mean, yeah, I think there's still everyone's, Rob was talking about sovereign wealth fund might come in, right? But who knows? They could come out and make some media around they've just decided not to, and price could be trying to reflect some sort of positive expectation that a sovereign wealth fund is going to buy. So to me, I think it's something along those lines of like where the market is expecting something to happen, and then you get some sort of catalyst that we don't really know when that could happen, but comes out and then price could head down from there.
On the sovereign wealth fund side, it's actually interesting. Many sovereign wealth funds are actually invested in Bitcoin miners. They're bringing more Bitcoin mining to their countries. We're seeing it across the Middle East. We're also seeing it across many other countries as well, where there are state-sponsored mining operations. Now, the interesting part from our conversations with folks in the Middle East is mainly around they're not buying Bitcoin yet, but for some reason they want to spend $500 million to build their own mining infrastructure. I think that is a huge signal for some of them entering the space in a much more major way, because they've been investing in a lot of companies throughout the past few years. But now you're looking at what they're building in the Middle East. They're taking gigawatts of power and dedicating it to Bitcoin mining. And yet they don't hold Bitcoin yet. Right. And so for those folks who, as they start to mature in terms of their life cycle of getting orange pilled, it's like they're very close to actually dedicating a significant amount of capital to Bitcoin. And they're doing it right now through mining, which is probably one of the most interesting expressions right now for a country to make, is saying, yeah, we're willing to dedicate, $1 billion to mining this year. It's like, okay, well, when are you going to be buying Bitcoin?
So I would love to propose my favorite question that I get from institutional investors. Well, actually, it's the second favorite. The first favorite is I just learned about Bitcoin yesterday. I think I can fix it, right? Which usually, like, okay, let's move on past that one. The second is, what happens if Satoshi was to reappear, or if the coins in Satoshi's wallet was to move? What do you guys think would happen both in the short and long term?
Two great questions. On Jameson Lopp addressed the first one, right? Which is, here are the lines of code that Satoshi can't even change. Here are he, I used to say he, she, they, but he self-identified once as a he, so probably he. Unless it happens to be the CIA, which probably is, but not joking, actually. But the key is, if that wallet were to move, it definitely changes the narrative of that being the nameless, faceless, kind of mythological, almost like a religion, right? But I don't think that would cause as much stress as people anticipate. I do think the idea that you could get enough people to agree to change the supply cap or things, and there are people that talk about that with inscription costs. That it would take a lot of concerted effort, so I don't worry too much about it.
I think one of my biggest concerns, we actually listed as a risk factor in our filings, if Satoshi's coins move. It actually would be a really big deal. I think my first thought would be, did someone break Bitcoin? Because that's honestly the biggest concern, right? Like if those coins haven't moved since they were put into the wall, it's like, well, here's the next question. It's like, well, why did they move? Is it the actual owner? Was it Satoshi? Or did someone figure out a way to break into his wallet? Like what was actually done to get access to those coins? I think if there was a Satoshi that came out and he moved some coins and he decided to sign some blocks that actually told everyone that he was Satoshi and he was back, well, then it's a big question is like, well, who is it? How did it start? You will actually get a lot better background on what the original thought process was outside of just reading, hundreds of pages of Bitcoin talk forums. So I think it is a big risk, but I think it's also, how did they move? And was it him that moved him, or was it somebody else?
I appreciate you alluding to the fact that maybe other people who have claimed to be Satoshi are not, since they can't seem to prove it. David, what do you think?
I mean, it's obviously a negative headline, like huge negative headline. But yeah, it would be a question of like, where were they sent to? Was it sent to a different wallet? If it gets sent to Binance or something, like that's not good.
There's one interesting thing on this that, when I met Pomp back in 2017 and we started this whole journey, so I have to thank you, by the way. So I actually just Googled Satoshi Nakamoto. And if you do that, you come up with Intelligence Central, because Satoshi means intelligence and Nakamoto is the surname of people from the central provinces in Japan. I'm like, whoa, that's like really close. So dug a little deeper. I'm like, all right, well, what if CIA/NSA did create this? And the plan was, we know we're fucked, technical term, with the current dollar system. So you get people to change fiat into this great hard asset, and then you steal it through a back door. And so Scott Stornetta, who, if you read the white paper, he is listed 3 times. He invented the word blockchain with his partner, Stuart Haber. So he's a venture partner of ours. And so I asked Scott, what do you think? Is this possible? He's like, well, I never really thought about that before. No. I'm like, what the hell? How did you do that? Well, he says, the way you're thinking about a back door is not possible in Bitcoin because of the air gap. Now, with Ethereum, it could definitely be possible, but that's a whole nother story. But it was just interesting that even if this were that, he didn't think
does anybody like
Ethereum?
I'm seeing people always like me that are definitely anti-Ethereum. So I'm going to let this video play out. It's like 5 or 6 minutes left, and we're going to shut it down for the night. Thank you for joining the Black Tiger Miner Bitcoin halving anniversary, or the Bitcoin halving day, or the Bitcoin halving holiday. This is the first one the channel hosted. So thanks to all you guys for joining. Thanks for your support. Don't forget to like, share, and subscribe, and check out the Patreon. Thanks all the guys for commenting. AR, Brian Robinson, Scott, Texas Crypto, Sugar Lump Crypto, and Ricky Island, and everyone else that came and commenting. And let's finish this video up. I'll let you guys get back to whatever it is. I might check out the rest of this, the NBA playoffs. But outside of that, love, happiness, and peace and hair grease. And let's get back to the money, guys.
So it would have to be, to your point, somebody actually having the keys and transferring, probably not being broken with quantum.
Last thing that I want each of you to opine on is in this market, as institutional investors come in, they want to think of position sizing, where to allocate the capital. But also, I think a lot of them are trying to get educated. They're trying to understand what is going on. How do I stay on top of what seems to be this fast moving 24/7, 365 market, which also is covered to some degree. And, people like CNBC, Bloomberg, Wall Street Journal, et cetera, they're doing the best job that they can, but they got a lot of stuff going on in kind of the global financial world. Kind of Bitcoin Twitter moves at a much different speed. And so maybe each of you could talk about like what were some of the resources that got you up to speed, and then also what are the things that you're looking at on a day-to-day basis that if you were in their seat, they should be looking at.
Yeah, so it's interesting. A lot of the institutional investors that we meet with, this is some of their first investments sometimes into Bitcoin-related companies, and they're often running pair trades against Bitcoin. So they're either long miners, short Bitcoin, or they're short miners and long Bitcoin. We're actually seeing that pair trade actually expand rather rapidly with the launch of the ETFs. Just the liquidity and their ability to trade in their prime brokerage account makes it a lot easier for them to do that. So a lot of the places that we point people to, at least on the mining side, there's some very good information about mining companies that is mainly done by, I would say, not the mining companies themselves, but like Clark Moody is a great dashboard that actually informs people about the Bitcoin, or about Bitcoin mining statistics. And there's also a lot of good information that's being put out by, I would call them Bitcoin mining supporters out there. We have a lot of haters. Greenpeace is definitely one of them. And so, we luckily have a lot of people on our side putting out good information around, the benefits that Bitcoin mining provides to grids, et cetera. So, on the Bitcoin mining side, it's, I'd say, look, if you Google Bitcoin mining, avoid the Greenpeace articles, and then you'll probably find some good information.
Yeah, I mean, I think, well, for my personal, I guess, journey in crypto, it's like started in 2017, and I just started learning through podcasts. I still feel like there's a lot of really good podcasts out there, but it just kind of depends how detailed you want to be in terms of like how into the weeds. But then, on Franklin Templeton, we're starting to publish a lot of research on Bitcoin and do more stuff on Twitter, which maybe some people have seen recently, but. Like actually today we published one on Stacks, the Bitcoin Layer 2, on our Twitter account. It's like FTI @FTI_DA. But yeah, I think it's one of those things where it's a native digital asset is really hard, I think, for a lot of people to get their minds around, and so just trying to absorb a bunch of different information from a bunch of different places is a really good way. To get a gauge of how you want to think about the asset itself.
I think the epiphany for me was in the early days, we tried referring people to what seemed like all the logical things, whether it's Jameson Lopp's Lop.net, which is the greatest collection of resources out there, to, hey, just read the white paper, to, hey, listen to, write the episode of Patrick O'Shaughnessy's and Invest Like the Best right before I listened to yours. That's how we met. There was one to try to explain how hashing works and all the details. It's
When did Franklin Templeton get into Bitcoin research? That's pretty interesting.
Great, except that's not what the institutions need. They don't need to understand how when you're talking to your computer, your metal and glass box, your wife can hear it on the other side of the country in real time. They don't have to understand CDMA versus TDMA. That was my mistake. What they need to understand, and so we actually created our own white paper for this, they need to understand capital asset pricing model, why I'm wearing the Embrace Volatility t-shirt, why the whole purpose of being a fiduciary is to create a portfolio of highly volatile assets that are uncorrelated with one another, that zig when each other
Upwork.
zags,
Upwork
so
is
they
his
can
access to
achieve their long-term goal, which is to compound capital above their actuary assumed rate. Once I stopped trying to help them understand the technology and just understand how this is, look, I'm old. I have white hair. I've been around a long time. And I've seen every asset that tried to help institutions do this. When I started in this business, it's hard to believe, equities were verboten, right? You didn't do equities if you were a good fiduciary. The cover story in the Business Week was the death of equities. Quote, no self-respecting fiduciary should ever own equities again. That was 1979. Crazy. So then equities were a diversifier. Then international equities were a diversifier. Then ERISA passed. And then you had hedge funds. And then you had venture capital. The problem is all these things are correlated to each other because they all are dependent on the same things: GDP growth, economic data, interest rates, and inflation. Bitcoin is not. It's 0.0 correlated to bonds, 0.15 correlated to stocks for a reason. It's dependent on millennial adoption, on the technology itself, on regulation. It's an entire new, and so I've been shilling now Chris Dixon's book, Read, Write, Own. And if you haven't read it, you have to read it. It's a super easy read. And every fiduciary needs to read it, because once you have the epiphany, which I did, and I wrote about this in 17 when we first met, that once you see that this is about a technological evolution, no different than the mainframe to the microchip to the personal computer, the internet to the mobile net, and now the truth net. Once you see that and you understand that a blockchain is the better way of doing compute, which, if you listen to Sam, is the most valuable asset in the world today, then you don't have to understand how it works. You just have to understand that you need to be there.
Thank you to all three of you. I learned.
Yeah, I guess that sums it up. So let's look at the numbers one more time. Don't forget to sign up for the Black Tiger Miner Patreon so we can get some discussions going on the Discord, get some more information out to you guys that way. And also, we're working on that crypto for beginners training class. We'll have that up as well. So get in now, because once the training class comes up, the price will increase. So we're going to work with the Discord, get everything formatted, and then push on over to the updated Patreon. So we'll look at the numbers one last time. Bitcoin is 63,615. What? So Bitcoin 6,668, up 5.4% for the day, and is zero in the last hour. I don't know what that means. I've never actually seen it at a zero. That's weird. But looking at the crypto market, everything is on fire. Lithium's up 12.3, Rose is up 11.5, Pith is up 8.5. Looks like somebody's buying crypto, guys. Flocka's up 8.9, Turbo's up 7.8, Beam is up 12.4. So I guess the European market's woken up because everything is green. Dog what I had is 23.6. Gala's up 8.6. Deutsche is up 9.8. Undo's up 7.3. Finally, Archblock is up 5.9. Monero's up 13.4. AVAX is up 8%. Luna is up 8.6. Solana's up 9.2. Brett's up 12%. My lady's up 5.3. Bonk's up 10.9. Matt is up 9.2. Everything is up. This is crazy. So I guess they were right. This is the beginning of the crypto bull run. Bonk's up 22%. Fetch AI is up 14%. Finally, GBCN is up 10%. We are in the money. Let's see, what is this? When was this? This was today at 4 o'clock. So yeah, we are finally in the money there. I'm glad I went and did that investing and bought in deeper. Ocean's up 11.2. 80A Cardano is up 11.8. Flux is up 6.4. is down 3.5. It's the only thing that's down on the board. Singles up 13%. Organized up 15.7. ARKM, what is this? ARKM is up 11%. DeLoyne is up 12.4. Prime's up 14.2. Bitcoin's up 5.7. So it looks like things are actually starting to turn up. But I don't want to hold you guys all night. I've already took 2 hours of your life away. So let you guys get some rest, and we'll hit it tomorrow sometime to check the prices and to see if we are getting bullish activity or if we've started the run. So thanks for joining. Thanks for sticking with us through the halving and the halving event. Thanks for supporting the channel. Thanks for tuning in to BTM and Peace and Hair Grease. This is Black Tiger Miner signing out. Remember Caspa. Caspa's the Army, better yet the Navy. Shout out to the Air Force. And if Elon Musk ever get it together, the Space Force, Caspa's going to the moon, baby. Caspa. Let's freaking go, guys. Remember, dance with who brought you to the party. Don't forget that. And as always, dance who brought you to the party. And peace out. And let's get back to the money.